Ahoy there, traders, and welcome once again. Welcome one, welcome all. As usual, just some appreciation. Thank you for taking a moment out of your day. It's a long holiday weekend, and appreciate that you could be doing other things. So thank you for deciding to spend some of your time with little old me and our little community that's going on over on, well, the main community that we have is over on Slack. So if you want to join the fun, join the party, join the conversation, if you just want to contact me direct, I tend to do all of my direct communication on Slack. Just go to my website, antivestor.com/Slack, and that'll take you straight there. Nonetheless, it's Friday morning, portfolio workshop. We're going to take a little look at the markets and just see where the next quarter takes us. I can't believe it's April already. This year and last year is zipping past. But nonetheless, we're going to be looking at quarterly profits is the generalized theme. And it's just a way to, well, if we do it right, we should be making monthly profits is the way that it's going. But like most businesses, we're not really, well, certainly I'm not so focused on the day-to-day. Although it is important, are we making a return at the end of the week, at the end of the month, at the end of the quarter, at the end of the insert time period? So I'm normally focused on the month. Get paid at the end of the month is, pretty much what I'm doing with swing trading. But the reality is it's 20 to 30 days is my typical average time in trade. But how can you ensure that you're seeing a return at the end of the quarter? One of the secrets to this, and this pretty much is the kind of the theme of the quarterly profit angle, essentially is to have a rolling portfolio. So it never works out that you have 10 positions on or 20 positions on or 30 positions on, and then you put them all on and then you take them all off. One of the things that I usually advocate, certainly on the swing trading side of things, is to look for one trade a day. It's reasonably straightforward to find something to trade every day. There's exceptions to every rule, as you may appreciate, but that is one of the things that we can focus on. Just look for one thing every day. Sometimes you'll find 2 or 3 things in one day that look really great, and we're going to look at how to find things to trade in just a moment. But if you do that, you'll have this kind of like rolling portfolio of a 20 to 30 day window of trades that are on, open, looking for new ones. And it takes that first month to kind of build it up. The second month is the maintenance and management of that. And then by the end of the third month, the end of the quarter, then we should be looking at having our trade ideas yield a profit. So it's not necessarily at the end of each quarter. Again, think about it like a rolling period. So you're going to be building up, taking profits and managing and maintaining that portfolio over a 1 to 3 month period. Just pop a comment in the chat box. Does that kind of philosophy ring true? And then we'll explore that a bit further in a moment. While you're doing that, for all the new people, so hello, Actor, Alan, Frankie, just skimming down, we've got John, we've got a couple of Johns. Hello, Michael. A couple of Mikes. Hello, Rodrigo, Scott, Vito. Hello, Vito. I think I recall missing you last week, unless you came in late. And I hope I'm pronouncing this one right, but Zimming. I think I'm supposed to pronounce the H in there, but I'm not too sure. Nonetheless, hello, everyone. Welcome. If today is brand new for you, the way that these sessions typically roll, we spend about 20, 30 minutes looking at the markets, and it's going to take up to about 60 minutes. I'm going to say that this is probably going to be a shorter session. But when I do say that, they end up being longer. So just be prepared. My time management is a little bit flexible in this hour. Depends on whether we get any good questions in the chat box. We're going to have a look at the markets, going to review stocks for portfolio trading, and then very similar to last week, we're going to look at finding stocks. But we're going to be thinking about it with the view of this rolling portfolio. How do we do it? How do we kind of bring it all together? And if today is your first day here, firstly, welcome. I'm not a Wall Street guru. I'm just a regular guy who figured a few things out. I like to have a laugh, a joke. Sometimes people might refer to me as a lifestyle trader. I'm thinking about my lifestyle first. And I don't mean like sitting on a beach or doing any of the weird stuff that people always brag about. I like a nice relaxed pace of life. I want to go for a walk in the mornings. I like getting my 10K in, doing some exercise, generally noodling around. I'm in the UK, if you can't tell by the accent. So, you know, by time it's lunchtime, early afternoon, around about now, the markets are usually opening. So I get this low, you know, leisurely pace of life. I like reading books, drinking coffee, all the other good stuff. Maybe there's cake involved in my day somewhere. I just want to enjoy myself. I just want a slow pace of day. Main motivations are I've got Crohn's disease. I'm looking to de-stress my life as much as possible. And I want to try and compress my trading in anywhere from a 30 to a 90-minute window. And we'll see that in a moment when we look over the shoulder of how we actually find trades and opportunities. I've got a long backstory. I won't read it out this week, but it's all there. The one thing that is universally true, no matter how I talk about what I do, I've been doing this a while. I'm in close to my third decade than my second decade, which is a scary prospect as the plumage starts to lighten and go grey. But I am obsessed with helping you replicate what I do. That is the one thing that is universally true there. It's the last thing that I mention right at the bottom there, but it's the first thing that's always true with any conversation that I have with all my traders. So let's think about quarterly profits. Let's not meander around it anymore. Let's go and take a look at the charts. So for any of our long-time watchers, you'll recognize this blueprint. This is typically the footprint that I'm focusing on at the moment, what I'm looking for. We have, when I say we, it's the royal we, I mean me. I have to do 7 different scans that help me find, filter, and sort opportunities. This is the main one. So I'm not keeping any special secret ingredients. This is the one that I like at the moment. I've been using this or a variation of this for decades, I think I'd have to say. In an ironic twist, this is, well, I didn't appreciate it at the time, but this is how I used to trade. Or again, some variation of this, because obviously as time goes by, as we gain experience, my understanding of my own process gets easier, gets more enriched, which obviously benefits you because it means that I can explain it in what I now refer to as a production line process. You know, step 1, step 2, step 3, and so on. I want to mechanize it for myself first and foremost, for the reasons that I mentioned earlier. I've got Crohn's disease. I don't want to flick through hours and hours of chart after chart, being like a zombie. I want to zero in on what's the best opportunity today to help me create, you know, monthly and quarterly profits with this rolling portfolio that we've been discussing. So it's not just about the pattern, the setup. Again, I want it for me first, because thinking about the end results, the 4 stages to this scan is, you know, number 1, do we have a mechanical trend? Now I'm using moving averages right now. And if you want to put something else in its place, that's okay. If you want to use Dow theory, Gann theory, Elliott wave theory, if you want to use percentage R breakouts, if you want to use stochastic dip, whatever the tool is, it honestly doesn't fucking matter. It really doesn't. The biggest thing you should take away when it comes to indicators and tools is it's a mechanical reason to do something. Let me just segue back to, let me just go back to the slides. Here's one I prepared earlier. The whole production line process, and yes, I've prepared a fancy slide for it this week. I just wanted to show it off more than anything. But the whole purpose of a production line process, there's 4 stages to the production line. And the first step that I was just starting to walk through is this. This for me is the time-saving secrets. I wish I'd known about this years ago. I truly wish. But nevertheless, we've got to go through the run of the mill. Before I applied this logic, and it basically it's a scan logic. There's nothing clever, creative, or fancy about it. We've all heard about scanning and filtering and all the other stuff, but this is the time-saving secret. This means that I don't have to look through chart after chart after chart after chart and spend hours doing this, trying to divine some sort of, is this the one experience? So I want to create a short list of stocks. And then the second part we're going to focus on today is that visual confirmation. Just because we've got a mechanical criteria, a thing has happened relative to the mathematical indicator. And I'm being intentional by not saying signal. It's not a signal. Get past it. There's no such thing as a signal generator, not at all. What we are looking for is a footprint that is replicatable, because the whole thing with charting, and certainly my philosophy, is that history repeats itself. Things do moving cycles. So we're looking for prices to ebb and flow back and forth so we can find some footprints that we can profit from. So we have a mechanical footprint. Then we want to visually confirm, is it doing the thing that I'm expecting it to do? For example, if the average prices are moving up, that's our scan. Visually, we want to see, is price actually moving? Is it actually trending? And if the answer is yes, then we can start thinking about, do I have an entry? I've got 9 patterns that I like. They're all variations of the same thing. The only reason why I call them something different, and the only reason why most patterns are called something different, is context. But essentially, I'm going to look for a pullback, and then I'm going to manage it. They're the 4 stages to our production line. As usual, we're going to focus on the first 2, the mechanical scan and the visual confirmation elements, to help us navigate that quarterly profit, that rolling portfolio that I was just talking about. So step number 1. So this is the blueprint. So to be able to scan and do all that heavy lifting over here on the watch list on the left, I need to know what I'm looking for on the chart first and foremost. That's what I need to do. So that's what we're going to do first. What are we looking for? Average prices crossed up. Insert your own indicator, Dow theory, Gann theory, Elliott wave theory, doesn't matter. This time I'm using moving averages. And one of the things that I do like about them is that there's no ambiguity. There has been a cross in the average price. That's a fact. It doesn't matter whether I've been doing this 27 years or you've been doing this 27 days. It doesn't matter. It has happened. It's a fact. Great. That means it's mechanical. You can repeat it. If I was to drop dead tomorrow, God forbid, but you would be able to walk away and come up with the exact same result. And this is one of the benefits that I teach all my traders, is that regardless of where you are on the new or experienced spectrum, you should be able to replicate this after a few days and when you've got to grips with the logic. So number 1 of our mechanical production line, step 1, first production line, find something to look at. It's in a trending state from a moving average to help us avoid whipsaws, the yo-yoing back and forth, because one of the downsides to averages is they can flip-flop back and forth if price is ranging. So we want to make sure that it's in a trending state for at least 40 days. And if you're looking at this on different time frames, you could look at this on a 5-minute chart, a 15, 30, 60. It's the same philosophy. It's 40 bars. In this case, I'm looking at a daily chart. I'm focusing on swing trading, and it's going to be 40 days in trend. Again, we use this in our over-the-shoulder training for the day trade stuff, and we do this on the 60-minute chart as well. So it's the same logic. If you want to get paid at the end of the week, just change the time frame to a 60-minute chart. If you want to get paid at the end of the month, daily chart. If you want to get paid at the end of the quarter, weekly chart. Nice and simple. Scale it up, down relative to your personal circumstances. So step number 2, in trend for a sufficient amount of time to help us avoid whipsaws. Step number 3, is it actually moving? Is it actually moving? So I've got it marked off again. We're just focusing on the earliest possible time that a stock becomes interesting. So step number 3 is it moving? And we can define that mechanically by saying, is it up about 25% in the last 90, 60 or 90 days, dealer's choice. There's no right or wrong here, but that sort of window. Looking back, we can see that it is going up and has been going up in the last 25% in the last 60 days. Easy peasy, nice and easy. So that's the point where we're going to be interested. So at this point, this first yellow box, this is where it becomes interesting. So now, I still don't want to look at every chart every day. I can do all of this. We're going to look at it in a moment on the left, but I can do all of this on the left. Then, in fact, let's do it now. but this is the kind of the line in the sand. This is where I want to be interested in a stock. And similarly, we could be looking at this second yellow box here. The only thing that's separating one phase of movement to the next is the time in trade. So we've got 2, 4, 6, 8, 10, 12. So we've got 120 days there. Again, the only separation, 12, 14, 16. So we've got about 180 here. So the only thing that's separating these is the time in trend, days in trend, DIT, days in trend. So it's going to be at least 40, but it can be any length of time for that matter. Can be any length of time. But I want to do it all on the watch list. So this is what we're looking for. This is the footprints that I very regularly go through. Again, this is just one of several scans that I have to find candidates. And all we're doing is we're saying, if a stock is trending, I want to buy the dip. And it's so simplistic. And you might be thinking to yourself, oh, of course, buy the dip, BTFD, diamond hands, all the other bullshit that you hear on the internet. It's like, that's great. Like, but what does it mean to me is what I'm trying to define. And what does it mean to you? How do you buy the dip? It's the single biggest question that I get all the time. Just because a stock is low value or low cost, it doesn't mean it's an automatic buy or it's good value. Like GameStop is a great example. It got up to whatever it got up to, 400, 500, a gajillion dollars. It's now down to 300. It's dipping in the context of its very parabolic short-term trend. Is it a buy opportunity? No, it's not. No, it's not. It's a pump and dump. So we need to look at the context. We're looking for stability of trend. GameStop, it's jumping back and forth, as are all the meme stocks at the moment. They're jumping, they're yo-yoing back and forth. I'm not interested in that type of stock. If that's what you're looking for, then this isn't the right place for you. I'm looking for stability. I'm looking for trends. I'm looking for money flow. I'm looking for institutional buying. And this is a footprint that I can look for to help me find, is there money flow? Is there something interesting going on in this stock, in the market, on this time frame? And if you want to put a different time frame on, if you want faster results, for example, if you do want to spend a little bit more time at the desk, a little bit more time, then drop down to a 5-minute, drop down to a 15-minute chart. If you've got a little bit of time during the day, and all I'm talking about is checking in once or twice, then go to a 60-minute chart. You'll get paid at the end of the week with the same philosophy, the same logic. If you want to get paid at the end of the month, then it's daily charts. It's all relative. Which one's right for you is going to be dictated by how much time do you have available. As I say to everyone, if you don't have time to day trade, what's the point in learning how to day trade? It's the same principle. So think about what you want and the availability that you have from trading. If you don't want to be sat here all day, every day, daily charts and what we're going through right now is going to be perfect for you. If you don't have time during the week, maybe at the weekend is the best time for you to be doing this. Then maybe it's going to be get paid at the end of the quarter, get paid at the end of the 6 months. You're going to be on a weekly chart. So it's the same. All I'm trying to illustrate, it's the same things, the same footprints that are on all the time frames. Which one's right is going to be dictated by the lifestyle that you want. I don't want to be sat here all day, every day. I've spent 12 years as a day trader, doing it all day, every day. It's not pleasant. My health suffered, became very ill, and nearly had a relapse with my Crohn's disease. It's not pleasant. So I compress everything that I do into about 60 to 90 minutes, at least 30 and no more than 90 minutes, using these processes, this mechanical step. So anyway, now I think I've belabored that point. Let's go and look at this. We know the picture. This is the end results. So let's do this. So this column here, I've had these custom coded. I give them to all my traders. So you can kind of speed things up. The platform I'm using is TradeStation, and I'm just going down my list of stocks, and this column is saying, I'm just putting a break here so you can see it very visually. All of the stocks above the break are in a bullish trend, which is what we've just modeled on Twitter. But if you want to look for a bearish trade, a shorting opportunity, then we've got a number of stocks that are potentially in a downtrend. That could be good. If you want a balanced portfolio, you can certainly find it in these markets. So going back to the, let's do it. So what we've done so far, number one, are we in a mechanical trend? The average price is going up. So the next thing that I want to do is 40 days in trend. So this column here, DIT, days in trend. I need to know that. I can sort the stocks relative to days in trend. So there's not that many that are less than 40 days. I'm going to leave them in just for speed. But, you know, if there was several stocks, I could cut them out. There's only quite literally 4 stocks. So I'm probably not going to bother just for the interest of speed. No less easy to do. So that's that done. So that, by happy accident, I've got 255 stocks in my little universe that are meeting those 2 requirements. So let's try and trim it down a bit further. So the next thing I want to do is number 3. Is it actually moving up? Is it up 25% in the last 90 days? So this column here is saying, I've got it set to, in fact, I've actually got it set to 60 days, but I can sort all the stocks. Are they moving? So in the last 60 days, so I'm looking for up 25%, and I'm just scrolling up. We're up to the 10%ers, 15, and let's use 20, just because there's a little bit of fluctuation from time to time. So I'm going to use 20 as a cutoff. It could be 20, 25%, could use 30. The number is, it's not as important. We could certainly look for stocks that are up 10% in the last 60 to 90 days. But these stocks now are getting excluded because while they're in a trending state, they're not really moving much. So if they're only up 5% in 60 days, it's probably not trending. It's probably in a range. I'm making some assumptions. I'm looking for stocks that are moving. So now I end up with, so my 300 stocks go to 250. My 250 goes to 140. So I've got 140 stocks. So I'm chipping away at this universe. And again, we've not looked at a stock. Has it moved up? So the next part is I want to find a stock that's in one of these states. So we've got all the stocks that are currently in some form of trending states. But now I want to find, is it retracing in the context of an uptrend? So I've got 140 or so stocks that mechanically, without looking at any of the charts, they're all expected to be in a trend. And if I just go and pick 1 or 2 at random, let's just do that one. I'm expecting to see a trend. Let's just pick another one at random. I'm expecting to see a trend. That's what I'm expecting to see. Just pick another one at random. I'm expecting to see a trend. So I can do all of that without looking at a chart. Again, I'm just clicking on a few random ones just so that you can see. We're expecting to see one thing. And when we go and see it, that's what we should see. So that's what we've done. We've got average price in trend. It's actually trending. And now I'm going to look for the retracements. I can do this in 2 ways. The first way is it's down 10% in 10 days. The second way is it's below the 20-period moving average or the 50-period moving average. So the 2 ways. Usually it's going to be one, then the other, and then both. So one of them will happen. And most of the time, both of these things happen. And that's what these yellow boxes are. So we're not trading every possible pullback. So what we've done is I've defined step number 4, what a pullback is. A pullback to me means that we need to see a retracement, a correction, a move in the opposite direction. Phrase it however you want. But a move in the other direction, if the trend is up, we're bullish, then this is what I'm going to define as the dip. The dip is going to be at least 10%, or it's below the 20-period moving average, or it's below the 50-period moving average. So let's look at that. So we've got the 200 is there. That's helping us with the overall trend. That's what's the average price. The 50-period is here, and quite close to it on this occasion is the 50 periods. My apologies, the 20. So we've got 3 moving averages. The dotted line, it might be a little bit difficult to see. I will draw over it when it becomes relevant, but we can see that it is there. So the pullback is going to be defined 1 and 2 ways. So I can look for, well, I can scan for 10% in 10 days. So another built-in tool. Now this is, again, comes as standard in most platforms, but I can look for stocks that are up or down in the last 10 days. So now I've sorted this column here. This is what I'm highlighting, this column here. All the stocks are down 10% in 10 days. So that's one way that I can scan for those opportunities. And there's really only 4 stocks that are down 10% in 10 days. One of them's 8%, one of them's 7%. So, you know, it suddenly becomes very easy to scan a big list of stocks in a very short space of time. So what I should be looking at on those 4 stocks that are highlighted on the left is that they're in a trend, all varying degrees of time, but at least 40 days. They're up at least 20% in the last 90 days. And these 4 stocks, they're retracing the yellow boxes. It's going to be one of those, the down 10% in the last 10 days. So we've got a fast retracement in the context of an uptrend. Let me just pause there. Does that make sense? Everyone happy? Like, just give me a little yes in the chat box, pop a comment below, and just let me know that we're all on the same page at this point, which is code for I'm going to take a drink of water. Awesome. Thanks, Jason. Thanks, John. Michael, thank you. And Rodrigo. Hello, Rodrigo. Cheers, Scott. So I can find these opportunities relatively straightforward. So that's the first way. 10%, 10 days. Cheers, Chris. Thank you. The second way is we're below the 50 or below the 20. So the second way just requires sorting and sifting the moving averages. So this list of about 150, I can sort by the moving averages, the middle one. So these are all the stocks that are now in a bullish trend, but they're below the 50-period moving average, very similar to what we look at on Twitter here. So these stocks here, they're in trend, they're going up in a trend for at least 40 days, above the 200, but they're below the 50-period moving average. So look, I'm expecting them to look like Twitter. I can further filter by saying they're above the 50, but below the 20. So maybe we've just got the start of a retracement. And again, I can rank and sort all of the stocks. So we don't necessarily need 10% in 10 days. That's just one of the ways. Usually it's both, but we don't always get it. So now these stocks here, they're all, you can see the boxes there. They're all blue, 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 blue. We're expecting to see a rally in an uptrend. So rally in an uptrend. So that's what we're expecting. The top of these yellow boxes is what we would expect to see these ones. So these, we're not so interested. But now that I've got them here, when would they be setting up for a retracement? So now that we've got them separated, just looking over here on the left, these are all rallies. These are at the top of the yellow boxes. So when would they become interesting? So now that I've sorted them, again, I don't need to do this every day. I just need to do this once a week, twice a week. I could do it every day if I wanted to, but now that they're sorted, I can say, okay, well, these are all in what we call a phase 3 trend. They're above the 200, above the 50, above the 20. And what we want to do, we want to capture that profit. So we want to, again, capture that part of the move. We want to capture that part of the move, the phase 3 trend. So that's what it's saying over here. So if I'm looking to try and profit from the retracement, well, I can look for those list of stocks when one of these, that column on the left is referencing the 20-period moving average. That's when we start to get a retracement in the context of an uptrend. So it will change to red at the end of the day. It's only looking back at the close of the day, but that would be the first indication to say, you know what, of these trending stocks, they're now retracing, and I can move them to a separate section, either manually or I can resort them all. But these are the ones that might make the most sense to start looking for a pullback entry when they close below the 20-period moving average. We might also see some of them go below the 50. So we'll see the color change to below the 50. So they're all ranked and sorted. I don't need to do this process every day. although you can see that it could be done, it takes just a minute or two at the most. But as they're all sorted, if I was to check in tomorrow, then I can see that, oh, you know what? These 4 stocks here, as my hypothetical example, they're all in that retracement mode. I can move them to a different area to keep an eye on them. They may have an entry opportunity imminent. They become interesting. I can start looking for stage 3 of my production line, look for an entry. Anyway, with that said, that's what I'm looking for. So let's scroll down to this next section. So that's what's happened here. So these list of stocks, as we've ranked and sorted them for the first time, they're all bunched up together. So we can see that they're in a bullish state. They've been in a trend for at least 40 days. They're all going up visually. I can see that they're all up anywhere from 20 to 100% in the last 60 days. So they're moving. But right now, price is retracing. That's what that red box is in the context of a trend. I can also look down this column here and say, okay, we can see that they're actually in the last 10 days, several of them are down. One of them's down 11%, one of them's down 1%. It's not really down too much. 7%, 5%, 3%. So they're all varying degrees, but I can see which ones are down in the last 10 days by any measure of a percentage point that I care to choose or dictate. Now, this next column is interesting. What I can look for here is, now that I know that all these stocks are retracing, I can have this one look back at over the last 3 days and see if it's starting to move higher, if it's starting to push upwards. And that's telling me that, you know what, the retracement might be over. So we can see, for example, let me just get a for example. This one here. Bear with me. There we go. Let's use that one. So this one here, we've got price is in a trend for 111 days, bullish trend. It's going up 50% in the last 90 days. It's above the 200, it's above the 50, below the 20. It's retraced 10% in 10 days, but in the last 3 days, it's up 4%. So that's the row I'm looking at there. So I'm expecting to see something like Twitter, where it's rallied, it's retraced below the 20. And you can see in the case of Twitter, it's starting to push higher in the last 3 or 4 days. So that's what I'm expecting to see, something like that. That's what it looks like over here on the left. So does that make sense? Before we actually go and click on the chart, does that make sense? That's the footprint. So it's been in a trend for 111 days. So it's probably around this area of, if we compare it to Twitter, because that's when we're about 100 days. So we're somewhere around there, that kind of like third yellow box. So just pop a comment in pop a yes in the chat box. Does that make sense? So we can do all the heavy lifting in the watch list on the left. And if I'm looking to zero in on a buy the dip candidates, I only need to look at 1 stock today or 2 stocks today. And this is it. I pretty much do something similar every week, whether we're looking at swing trades or we're scanning for day trades. So you can kind of have a little look over my shoulder. But the whole purpose is it takes longer to explain this than to actually do it. So when you get to grips with the whole production line process, it should be relatively straightforward. Step 1, step 2, step 3, step 4. Okay, great. Now I can go and look at the charts. Because again, remember, we're looking at this with the benefit of hindsight, because I'm trying to compare the bit on the right with the bit on the left. But when you do this yourself, when I do this, I'm not looking at the chart. I'm not comparing them. I'm not pointing things out. All we're doing here is mechanical scan. And it's quite literally like a spreadsheet. Click, click, sorts. Click, click, sort. Click, click, sorts. It takes 30 seconds to rank and sort all the stocks that you care to monitor in a spreadsheet, so that you get, okay, these are the 10 stocks that are retracing in an uptrend. And you saw them. There's just 10 out of 300 stocks in this little segmented universe. There's only 10 of them that are retracing in an uptrend. I don't need to trade all of them today, but they're all ready to go. They're all retracing in that uptrend. Let me just catch up on some of the comments. I see there's a few comments there. Yes, Jason. So Jason's asking, once you find a stock, so that's what we're doing. We found a list of stocks that meets these requirements. How do you determine the entry points? That's a little bit beyond what we're doing. I've got 9 entry patterns. that I use in my training, teach all my traders them. But which one might depend on experience. I teach a very basic mechanical entry point for the newer traders. For some of the more seasoned trader who are familiar with some chart patterns, we can layer on some entry refinements. So I don't know where you're at in your journey, but you could quite literally use the moving averages as price starts to move back above. If we go below the 50 and it goes back above the 50 or the 20, it starts to resume its upward movements. You can certainly start to think about an entry at that point. Anyway, mechanical scan, all we've done is mechanical scan. Now, this is the point when we've got our shortlist, our 10 stocks. That's when we're going to visually inspect them. That's what we've done. We've chosen one that is looking like it might be, if we were to overlay it on Twitter and try and match up the points, it should be looking the same. That's what we're trying to figure out. It should be looking the same. So it's CPRI. I don't even know what this company does. It doesn't matter. But this is the point where I can say, now I'm going to invest my time to visually inspect. And again, let me just pause again here. This is the part where most traders, what we've done here, this is what most traders kind of, not necessarily mess up, but kind of get the wrong way. They'll go and look at every chart every day, all of the time. They'll look at hundreds and hundreds of thousands of charts. Is this the one? 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 The reality is we've just done it. Like, let's find the mechanical footprint, the things that aren't changing. 40 days, average price crossover, 40 days in trend. It's going up, retracing in an uptrend. All those 4 things, they can be done over here. That's what we've just done. We've not looked at the charts. I'm just comparing them so you can see what we're matching up. So now we've got it. That's the only chart I need to look at today. Is it developing an entry for me? So it was what Jason was asking. I can give you a quick answer to your question in a moment. Average price crossed up, number 1. It's in trend for at least 40 days. Great. I can see it's been in a trend for 111 days. Visually, we can see it's going up. We want to be seeing it move up at least 20% or 25% in the last 10 days. It's up 50% in the last 90 days. We can see it's up more than 50% by visually inspecting the charts, but it's only looking back over 60 days. Is it moving up? Yes, great. That's what it's doing. We're below the 20-period moving average. We're above the 50, and obviously we're above the 20 there. So that's all that information there. Let me just highlight the line so it stands out for you. One of the things that you can do on Zoom, somewhere at the top if you want. I found this feature last week. I'm pretty happy with it. But if you want to zoom in, you should be able to zoom in on Zoom, so you can zoom in and zoom out. So if you want to inspect some of these areas that are maybe difficult to see, maybe you're watching this on an iPad, maybe you're watching this on a mobile, you should be able to like pinch in and out and have a little look in. So I'll just pause here for a moment in case you are doing that, and then you can kind of see what I'm looking at, because I'm obviously doing this on the big monitor on the desktop. So we've got a dip in the uptrend, and then number 4 is retracing in the last 10 days. It's just dinging off that 50-period moving average. And to answer your question, Jason, what you could quite literally do is say, as it moves back above, let me just change colors, as it moves back above the 20-period moving average, and the 20-period is there. Again, I appreciate I've got it set to dots, so it might not be easy to see, but that line there is the 20. But as it moves back above the 20-period moving average, you could certainly start thinking about an entry at that point. Until it does, we're not really that interested, because it may continue. Because what we don't know is how long that retracement is going to last. So it's not an automatic, oh my God, it's retracing in an uptrend, let's buy. It's not an automatic. We want to make sure that it's doing the thing that we want it to do. So we've got 9 different entry patterns, 9 different entry patterns that help you as a trader. Which one is going to depend on like where you are in your experience level. As I mentioned, the most mechanical, the most simplest one to do is as it's moving back above the 20-period moving average, you can start thinking about it. If you're a little bit more seasoned, you can start thinking about different patterns, reversal pullbacks, 1 to 3 patterns. You might like triangle. I don't know what your knowledge base is. I teach 9 different patterns that I like using. but they're all designed to help you get an entry, define a risk, and then part of the process is to look for a target. You know, where do we think this is going to get to? We know we know where we're getting in, where we're getting out, if it goes the right way, if it goes the wrong way, if it takes too long to get there. So step number 4 of the process that we use when we're in a trade is, again, we're just talking about an entry there. Step number 4 is kind of the trade management. TTE, timeout, target out, exit out. There's only 3 things that are going to happen. It goes up, it goes down, it goes sideways. So we want to make sure that we maximize the opportunity, and we've got benchmarks for each of those things to guide us through the entire trade. That's a little bit beyond our time together today, but ultimately the whole focus of this is to help you find things to trade on a daily basis. I've got to admit that that's the single universal question that I get asked: what do I trade? How do I trade? And I pretty much outline this, or some variation of this, every week for you, so that you're never going to not know what to trade. You know, now that you know this, you're spoiled for choice. You've got, at the very least, you've got about 15 stocks here that might make sense. At this point, again, I'm going to go and look at them visually, but we're expecting to see something that looks like Twitter. So the visual inspection part, if we wanted to look at all 10, 15 of these stocks that we filtered, it doesn't take too long to go and visually inspect them, because now we're expecting to see something that might be interesting. Whereas what most traders do is they'll just look at any charts for no particular reason. There's no rhyme nor reason of why they're looking at it. So they just flick through chart after chart after chart after chart after chart after, hoping that they're going to recognize something. Now, what we as smarter traders, what we can now do is we can, with intent, figure out what am I looking for. And that's what I've shown you. Again, whether you like my process or not, you've got an overarching process that you can use. Like, what are you looking for? What's your perfect trade? What is your idealized setup that you want to look for? Great. Now you know whatever that is for you. And I've shown you mine. I'll show you mine if you show me yours. I've shown you mine. You can work backwards. So the visual inspection part of this process is, does it look like Twitter? Yes, great, keep it on the list. CME, does it look like Twitter? Yes, keep it on the list. And all I'm doing is pressing enter. And you've seen how quick it is. And this, the only question that I'm asking myself is, does it look like Twitter? One of those 4 areas that we had highlighted. Let me just go back. TWTR. So this is our model, Twitter. Does it look like Twitter? That's what I'm asking. Does it look like Twitter? Yeah, great. Keep it on the chart. CVX. Does it look like Twitter? Yeah, keep it on the list. CZR. Caesars. Hail Caesar. Does it look like Twitter? Yeah, that's looking groovy. Disney. Does it look like Twitter? Yep. Donkey Kong. Not Donkey Kong. DraftKings. I don't know why. It's my silly little bizarre humor. I don't know. I don't care. It amuses the crap out of me. DKNG. Does it look like Twitter? Well, it's a little bit sloppy and messy now I'm looking at it. It still looks like Twitter. It's not the best example. Okay, so I'm less excited about DKNG. Goldman's, does it look like Twitter? Hell yes. Looks awesome. HCA, Healthcare, does it look like Twitter? Yep, looks awesome. JCI, Johnson Controls, does it look like Twitter? Awesome. Great. I was expecting to see all these trends. Are they looking like Twitter? And what I'm looking to flick one on the reject pile. Does it look like Twitter? Does it look like Twitter? At any one of those 4 stages, early, mid-stage, or end-stage trend, does it look like Twitter? Yes, all of these look like Twitter. Right, we've validated. And you saw how quick. Visual inspection does look, yeah, they all look great. Now, sometimes when we do this, like with, which one was it? DKNG. DKNG looked a little bit sloppy, a little bit messy. Reason why I'm saying that, I've not got a lot of data. It's kind of a new issue. The bars, the wicks, the candles, they're all a little bit spiky, a little bit whippy. From a quality point of view, this is a visual thing, but from a quality, just that visual inspection, I think we've seen the best charts. So I might be inclined to take DraftKings out of the equation just because of voice of experience more than anything. But as we've just gone through, same list again, just going through them very quickly, does it look like Twitter? These are all awesome candidates for swing trading potential. These are all buy the dip candidates. You should not be stuck for something to trade. You should never, ever be stuck for something to trade. You've got a process, you've got a roadmap, you've got a blueprint, you've got a systematic approach to find, filter, and sort stocks, to find something like Twitter every day, every week, every month, so that you can start to build up a rolling portfolio. Now, not all of these stocks are ready to go today. As price starts to push higher, as it goes back above the 20, as it resumes its upward movements, we've got mechanical processes to find an entry as a part of our mechanical process. So there's nothing needs to be done immediately today. What I will do though is I'll pop this list in our little community. We've got the Slack group. So if you want to copy these stocks that we've had a look at right now, so from today's workshop. There we go. So if you want to copy those, if you're in our my Slack group, go to antivestor.com/Slack, and you can have a copy of those with my love. There we go. But again, all we're trying to do is figure out, like, how do we find something to trade? What makes the most sense? But I'm not wasting time with things that don't make sense. Let me just go back down to, you know, some of these are a little bit mixed. So for example, we've excluded these. Doesn't mean there's not going to be a great trade on it. Doesn't mean it's not going to be a great trade. It's just, it's not what I'm looking for. And I think again, just to reinforce the big difference between what you now know as more informed traders compared to the novice trader who's just thrashing about trying to figure something out and divine something. Is this the one? Is this the one? We should never, ever be asking ourselves, where's the trade? Where is the trade? We should always be looking for opportunity that makes the most sense. And then when we have a model of what we're looking for, we should be able to go, there's the trade. There it is right there. And we've just done that with 15 stocks. There's the trade. Now, we don't have an entry today. I didn't see one where I could kind of talk through, like, here's an imminent one. Here's a trading opportunity right this second. And that's the way it is with swing trading. But we've got 15 stocks that when the market starts to turn around, these could all be great bullish swing trade candidates. We're not going to be stuck. So maybe one of them sets up today. Maybe one of them sets up next week. Maybe one of them sets up on Wednesday. Maybe you don't have two. Maybe you have 2 or 3 days where there's no entry triggers. But then you might get 2 on Friday. Next Friday, you know, you should be building up this rolling portfolio. Again, the average time in trade is going to be about 20 to 30 days with this style of trading. Again, visually, you can see that, you know, how long did the rallies higher last? 20 to 30 days. It's pretty consistent when you're on a daily chart, when the market or the stock that we're looking at is trending. So it can be done very nicely. So if you've got a trade on today, trade on tomorrow, trade on the day after, maybe you skip a few days because you've got other things to do, you've got meetings. You don't have to do this every day. You can check in 2 or 3 times a week, but you shouldn't take quite literally 5 minutes. Now I've done all the heavy lifting. I only need to kind of look at those. Where are we? I only need to look at these stocks. Is it moving high? Does it have an entry? And you're going to have plenty of time to kind of sort all this out. You can do it outside of market hours. You can do it at the weekend. It's very straightforward if you've got less time than more time. Again, if you want to be a little bit more active, if you want more opportunities, increase your universe. If you want to be less active and less opportunities just because you've got less time, I don't know. It's one of those dials that you can turn to speed things up or slow things down. If you want an active, you know, 30, 40, 50, 60 stock portfolio, which some of my traders do, some of them have up to, you know, 300 stock portfolios. That's great. You know, you turn the dial, you have a bigger universe of stocks. This particular one's about 300 stocks. It sounds a lot, but the reality is you're only going to have maybe a 12 to 15 stock portfolio in a rolling month. So it's designed to give you a small portfolio, a consistent portfolio. Some of them are going to work out, some of them are not. Think about it like farming. You know, you're going to plant seed every day, plant a seed. Is this, you know, but we're doing it with intention. We're doing it in a smart way so that at the end of a rolling month, a 30-day window, a 20 to 30-day window, at the end of a rolling month, at the end of the rolling quarter, you should be planting those seeds and seeing your portfolio, the fields that you're growing, the produce, it should be yielding results regularly. Chris, yeah, you can absolutely, yeah. So Chris is just asking, I assume you're trading options with this method. That's correct. Yeah, it's more capital efficient. That's generally what I teach. Some people don't. That's personal preference. It's one of those, if you're a little bit more affluent than other people, then there's nothing wrong with using this method with stock. There's nothing wrong with it whatsoever. I just prefer to use stock options as an alternative to trading with stock. I find it more capital effective. And again, I'm not planning on holding the stock for years and years and years. My average time in trades 20 to 30 days, so I can replicate the same results or similar results that's more capital efficient with a stock option. So I would use an option instead of stock, and then when the stock actually reaches the target, I will just sell the option back to the market. So I'm using the option to profit from the movements instead of the actual underlying. I'm not taking delivery of stock for reference. I had that question earlier today. I'm using it as an alternative. So if the stock moves higher, the option will increase in value. And then if the stock does what I want it to do, I will sell the option back to the market and capture that profit that way. That's how I'm doing it. You can use CFDs. You can use, you do the same thing with futures if you want to trade futures. I specialized in futures for many years. So this system actually derived itself or originated with the IBEX, which is the Spanish index. And then eventually I moved away from European indices. I'm in the UK, if you couldn't guess. European futures, European indexes, currencies, traded currencies for 12 years using the same process. And then I moved over to stocks and then stock options just because I saw that as a greater opportunity than currencies. The oomph went out of the currency market about 2008, 2009. So yeah, just looking for those better opportunities. So all I'm trying to highlight is it works on anything. I've got an ETF list here. Let's go and take a look at the ETFs. I've got it set up a little bit differently, so it looks a little bit different, but there's the same tools and indicators. You're looking for that kind of like red, blue, blue. So here we go. It's GDX. It's retracing in the context of a downtrend. So you've got that early stage trend there, sell the rally in a downtrend on GDX. You've got UNG is in a bearish trend. Again, it's very easy. If you're looking for a bearish trade or you're looking for a bullish trade, it's very easy to just zero in. So XBI, I don't know if you can see it there, but you've got this blue, 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 blue. It's the first one's red, so you can go and look at the biotech, dipping in an uptrend. If you're looking for something specific, when you know what you're looking for, you want to buy the dip or sell the rally. It's very easy to do. So UUP, there we go. Invesco, this is the dollar bull. So maybe we've got a direction change starting on the dollar index. It's for the moment, it's in a bearish downtrend, sell the rally. It's just not today. You'd wait for it to resume its downward movements, but it could be turning around. It could be starting to change direction. We explain all of this in the phases. Some of my students have access to it. It's just a very simple logic of using the moving averages to help you determine what phase of movements the trend is in. What we focused on today is finding a phase 3 trend so that we can, buy the dip. And all we're looking at is, are the moving averages, again, does it look like Twitter? And if you want to look for a bearish trade, just invert the picture. Again, just another comment from Chris. I've been watching your videos and all I can say is thank you. I'm new to the whole trading world. Thank you very much for your kind words. So saving money to take your class. Thank you for your trust and faith. I look forward to working with you. Join Slack, send me a message and we'll have a little chat offline. Texas says hello. So another Texan. I have a lot of people from Texas. Awesome. Send me a message, Chris, and let's have a little chat in Slack. Again, I'm very, very open and accessible. Again, just go to my website, antivestor.com/Slack. Again, I've got a few messages, got a few different private channels, a few different public channels. You'll be able to get that stock list that we mentioned. If there's a replay, which will be ready tomorrow, you'll be able to get it there. Awesome. Thanks, Jason. Loving the comments and the feedback. Right. So what we've ultimately been through, and let me just kind of finish off. Here. So production line trading, that's my thing. It's my shtick. Do the kids say that anymore? I don't think they do. But production line trade, I want it for me first. Selfishly, I want it for me first. I want to know the mechanical reason to be looking at a chart, because it's painful if you're scanning through every chart every day, all the time, wondering, is this going to be the one? We've all been there. We've all done it. So mechanical reason to look at something. So you're only then looking at the charts, as we've just done, that make the most sense. I'm expecting to see a dip in an uptrend. Am I seeing a dip in an uptrend? We've defined each of those steps. Does it look like Twitter? Yes or no? If yes, move on to trade the next pullback. If no, put it in a holding pattern. It's a production line. You're not going to go to the next step until you've confirmed the previous step. You're not going to look at the chart unless you've confirmed the trend mechanically. You're not going to trade the next pullback until you've confirmed that it looks like Twitter. And similarly, you're not going to manage a trade unless you're in a trade. If you haven't got an entry, there's nothing to manage. So the last step of our production line is T to E, time out, target out, exit out. If you'd like to learn a little bit more about this, I'm referring to this as more and more as the perfect swing trade. It's just my way of saying it's on a production line. We've got a robust, systematic approach to find, filter, and sort stocks. I've been asked quite a lot about a more accessible version, because I've got to admit, my private mentorship, it's not cheap. I'm very good at what I do. And I help my students get results. I'm completely invested in helping you replicate what I do. But I've been asked frequently of, like, can we have a more accessible version? This is still in development. I'm restarting a kind of like a ride along version where you can kind of look like this type of session. You can look over my shoulder. You can get the stocks that I'm trading, exactly what I'm trading, how I'm trading them, what my entry is, what my stop loss is, what my target is, what strike I'm doing, what expiration I'm doing. It's basically a ride along version of the perfect swing trade. So if you'd like to learn a little bit more about that, just go to theperfectswingtrade.com. When you get there, you'll be looking at a page like this. Just pop your email in the box there and you'll get some information. There's no hard sell with this. It's just literally information. I ask you to send me a few details when you get there. But if you would like to learn a little bit more about it, just go to theperfectswingtrade.com and you can learn a little bit more about it. If enough people are interested, I will certainly do a ride-along version. And the other thing I'm just kind of chewing over as well, just to kind of give you all the inside scoop on what I'm planning on and what's coming down the pipe, is a challenge. Challenge myself more than anything. Can I take $1,000 all the way up to $100,000, but using swing trading, using this methodology? The last time I did it was over the shoulder in public was 2017, 2018. I've done it several times over the years. My first time was back in 2001 when I started out. I took £1,000 and turned it into $92,500 and change in 8 months. So I know it can be done. I like to do this from time to time. So enough people want to join me, then let me know. It's going to be application only. So I only want to work with serious traders. If you're serious, then head over to theperfectswingtrade.com, pop in your details, fill out the application, and learn a little bit more about it. And if it makes sense, we'll do something together. And if not, that's okay as well. I'll see you all next week at the same time anyway. But that's where I'm at for the moment. So that's the perfect swing trade. If you'd like to ride along and see what I'm doing, when I'm doing it, how I'm doing it, you'll get all the extra information. Right, folks, I'm just about done. That was quarterly profits. How do we do it? The secret is a rolling portfolio, as we've just outlined. When you find stocks every day or every other day or whatever time period makes sense for you, what you should be able to do, if you can find one thing to trade every day or every other day, which should be relatively straightforward with the approach that I've shown you today, then it should be easy to find an opportunity every day, every week, every month. If you do one a day or 2 or 3 a week, whatever makes sense to you, you'll have this rolling portfolio so that you can be profitable at the end of the day, the end of the week, the end of the month, the end of the quarter. It should all start to snowball into those quarterly profits.